As per available statistics, more than 10 lakh crores of rupees is stuck in installed housing projects in India at this point of time. There are more than 1600 such projects around us. It has been a matter of grave concern over past 5-6 years, and we have seen consumers raising a lot of voice about it, and government also responding in its own manner. Swami Fund was launched to help stuck projects get traction again. But is that enough, or has been too little, too late for this? So, what options do really consumers and developers also have? That is where last mile funding comes in. Last mile funding through private equity as well as through government infusions ensures that the working capital requirement of a project at the last stage of its completion can be met, and therefore projects can be delivered on time, whether it's residential, commercial, any kind of asset class projects. Last mile funding becomes very, very crucial. Today we are going to discuss this very important topic about how last mile funding really helps the real estate industry as such. What does it really mean? What are the different sources? And what can be expected? What are some of the best practices there? And as a consumer, what can one expect if last mile funding is made available? And how can this entire framework grow? Namaskar, I'm Prasun Kumar, and you're watching this new episode of the Property Show on MBTV, world's largest real estate online channel. To discuss this very important topic, I have got a stellar panel of guests available with me today. I'll start with introduction of the guests. I have got Mr. Atul Monga, who is co-founder and CEO of Basic Home Loans. I have got CA Niresh Maheshwari, who is Director of Wealth Wisdom India Private Limited. I have got Mr. Rohan, who is founder of Volney Commercial Real Estate Advisory. And I have got Mr. Mehernosh Tata, who is MD and CEO of Godrej Housing Finance. Welcome, gentlemen. So let's start with answering these very basic questions for our consumers. What is last mile funding really, and how does it help? Can I start with you, Niresh?
What is last mile funding? As the name itself depicts, this is the last option available to any of the player, be it a real estate, be it an industrialist, or be it a common man. What resort will he or she will take to keep the ball running? In a common parlance, this is what is last mile funding. Now, coming specific to real estate, those projects which have been stopped due to any of paucity of capital or due to some regulatory issues wherein the cost is increasing continuously, the funding needed to close this project to hand over the possession to the or to other people is the last mile funding, and it is the need of the hour to have some instruments, to have some banking guidelines on this particular thing, so as complete the project, and the buyers, who are the most important pillar of this industry, do not suffer. This is what my opinion is last mile funding.
Okay. Mehernosh, how crucial is last mile funding therefore for housing projects? Is it required at, in almost all the cases, or is it only stressed cases where this is required? How do you see this?
Yeah, I think first and foremost, thank you, Prasun, for having me on the call. I think first and foremost, it is very important that developers have a financial closure when they're looking at constructing a residential building or a commercial building. That is most important. Second, there are quite a few varieties now. The good part over the last year and a half has been that the developers now have a variety of places where they can access capital or funds from. Right? Like my colleague mentioned, you can go to banks and housing finance companies as a developer who has been building over a period of time with some repute to get funding from them. There are now private credit AIFs in place, which are more than happy to work with you, especially in your last mile funding. If you have properties which are 60-70% built, and therefore, if you need the last 20-30%, they are willing to come in and support closure or completion of the residential projects. NBFCs also separately are offering funding for such things. In fact, a new trend over the last couple of years has been around joint development. So, you own the land and somebody, but you're not the expert in development, of or construction of properties. There again, you have somebody coming in and doing that. So lot of large Cat A developers are now only going in joint development and helping this. You already mentioned about Swami Fund where things are stuck, and the government of India along with SBI is working on some of those. So there are a variety of options now. I would say a buffet available
Mm.
for our developers than what it was in the past,
Okay.
thanks to the booming real estate sector. And we can clearly see the disposable income of Indians rising, and therefore the aspirations to, move to their own homes, right? So
Okay.
I clearly see a lot of opportunities over here, and obviously it augurs well for the real estate. I would say folks as well as for end consumers, because as
Mm.
an end consumer, the last thing you want is your hard-earned money getting stuck in a
Mm.
project which gets stalled.
Hmm. Atul, tell me, why should the need for last mile funding be there at all? I'm told in Dubai, for example, developers are required to demonstrate financial closure and viability of a project even before the construction can begin, right? So that you do not get into any sort of financial stress or trouble during construction. Why is it required in the first place?
See, first of all, thanks for calling me on this panel. And, it's good to meet you. See you again, sir. See, I believe the last mile funding is primarily required for the closure work, means for the OC part, for the utility connections and those kind of last mile things.
Mm.
But these are very important. Without this, you cannot deliver the project. And
Mhm.
what happens in India is that I'm not sure about Dubai or Middle East, but in India, builders don't get everything upfront, even if they from a lender or maybe any other fund, say for 10 crores, they will be given that money in pieces.
Mhm.
Now in the last phase, there is a typical, you can say it's a 90% kind of trap kind of thing, that
Mm.
90% of the project is completed, that remaining 10% is pending, and
Mm.
for that the developer need money before, because till the time that final work is not done, they will
Mm.
not, no consumer also will accept that project, they would like
Mm.
it to finish. So it becomes very crucial. And as we were discussing that Swami scheme, it has worked to some extent, but it still needs a lot of work to be done. And as you rightly pointed out, more than 1 lakh crores of inventory or projects is, I'll say, frozen, that needs to be worked around. So that's why last mile funding becomes very important. And returns of these fundings are also very good. So a lot of players are coming, like Mr. Tata was telling that there are a lot of AIF coming up. So returns are good, demand is there. So I believe this is not even necessity. It's also a good opportunity in the market, that you can create something, create a good enterprise out of it.
Okay, so it's actually 10 lakh crores and not 1 lakh crore. But you raise an important point there, which is the systematic issues that developers or constructors also face, which leads to this requirement. Rohan, what are some of the system gaps, therefore, that constructors or developers have to go through, which necessitates the need for them to raise capital for the last mile completion of the project?
Thank you for having me on the show. There are a couple of last mile requirements with regards to regulations. There are CFO norms are required, so the final fire approval needs to be required. Final occupation certificate is required. A couple of guidelines with regard to technical due diligence. When it comes to commercials, you have a lot of mechanical, electrical, plumbing. The final lift certificates which is required. They do a couple of audits with regards to the fire hydrant also, and multiple such kind of an approvals are required. For that, a developer needs the last mile of funding. There are a couple of ways to achieve that. One is the obviously the conventional way of the banking and the NBFC, and the second one is the private equity. These days, the latest thing is coming up with the couple of ultra HNI investors coming up together and forming up an investor network. That is what we see as the latest trend in the commercial market. An individual investor having a capacity to invest close to 10 to 15 crore in a commercial market. And he has a similar kind of investors, 5 to 6 investors, 8 to 10 investors come together, form up an LLP. So where an individual person's ticket size was close to 15 crores, 8 or 9 people coming up together, their ticket size increases more than 100 crore. It helps easy for a developer. He gets a large amount of funding. The same way the buyer gets a good negotiation power, developer gets a funding, and the buyer is able to give that funding. Last mile funding is given, and plus, as it is a last mile funding, he is secured by the asset as well, because the asset will get ready soon. So that's the investor network model, which is upcoming right now, and it's just helping the developers to get the last mile funding.
Okay, so you are saying the risk is hedged a bit because the structure is already there. But
Yes.
Niresh, tell me, the point would remain that any investment in a project, would always be fraught with risks, right? And there are known risks, there are unforeseen risks as well. Given that, the point that Rohan is making, that there are also HNIs now coming forward, making LLPs, and kind of getting into it. So there are new kind of sources which are opening up. But how risky it is really, the last mile funding business? Is it something that can really be developed as a mature instrument for the industry over a period of time, or do you think this is really in its infancy at this stage?
See, we need to understand the entire real estate market for answering this particular question. I am fully in sync with what Rohan has said. It is one of the good instruments wherein people are pulling together. There are AIFs which are making capital contributions to complete the stalled project. We all understand and know that when the markets are upturned into upcycle, these all kind of products come into place. Then, because these are non-conventional products, they will have a higher cost. The weighted average cost of the capital for the developer will, in any case, be very high in these products, structured products. So if I'm talking, but these give me a flexibility to use the capital. I am not accustomed. They give me the speed to which I am these capital accessible to me.
Okay.
So when I have some positives on this, there are certain negatives that when the market is buoyant, the cost is getting absorbed into the project. But once the markets are into downturn or there is a stopgap arrangement, it should be a stopgap arrangement here, wherein if I don't understand the market cycle coming in next 3 to 5 years, if I don't see it, whether it is going to be a matured market or the people are going to invest here in this particular market, the cost will kill the developer, because this is a short-term instrument. The short-term instrument liability, the short-term liability cannot replace the long-term balance sheet asset.
Sure.
The
Absolutely.
capital contribution for any of the developer has to increase.
So the question is, if cost of capital is so high, will it then develop as a credible source or a credible framework over a period of time?
See, that is what I'm saying is it has to be a part of your cost of project. It cannot be one of the primary factors on which I am launching my product. 18 to 21%, the private AIFs, all AIFs, the ultra HNIs, they all charge roughly between 18 to 21% of the rate. After inbuilding the other cost of operations, this goes up to 20 to 23 odd percent. 23 odd percent capital on that particular rate will kill the margin, but it will save the developer if effected properly, if it has invested properly. So the object, this should be the last resort, but yes, going deeper into the markets, the market size, the people will come into this as a structured product rather than 10 people. If small people, the funds will come up with a 2 crore, 1 crore AIF size. Ultra HNIs will go to that extent, and then in the second level developers will get a cost benefit here.
Okay. Mehernosh, tell me one important aspect, an argument in favor of last mile funding also is that because of all the challenges that the industry has faced over the last 10 years of non-delivery, etc., that has eroded consumer trust to a great extent. And these kind of fundings are required to restore that to a large extent. Yes, RERA came in between, and post RERA we have seen some positive traction over there. But there are still many projects which are pre-RERA projects which are still stuck and do require support. So do you think there will always be a case for last mile funding as we move forward, or do you think as industry matures, as a lot of these regulations set in, the requirement for such high cost of capital to be borrowed from the market would reduce significantly?
Yes, I think if they plan it well, then last mile funding is always more contingency planning. Okay. It ideally when you're looking to make your financial plan and closure on a particular project, you normally don't think of last mile funding, especially at the rates like Mr. Maheshwari spoke about. They're extremely expensive. And therefore, if you're actually developing a residential unit, it is also construction linked payment. The end customer who has bought the flat is actually paying you, giving you the cash flows every time you're raising a demand, saying the fourth floor, the eighth floor, etc., has been completed. So effectively, if you are constructing in line with what you have planned, there is very limited reason, frankly, where you want to get into this very high cost last mile funding issue, right? And I would draw an analogy very similar to individuals. Let's say, as individuals, if we were to be given a personal loan at 18 or 25%, right? I mean, everybody can get a personal loan at those rates. Would you really want to use that money when it is so expensive, right? So I think it is about being able to, if the developers plan this well, the construction is done on time. There are no other contingencies, unforeseens, which come in, which actually stall the project. And now with certain guidelines, like you rightly mentioned, RERA, the escrow account, even the IBC has got more teeth in terms of it coming in. Some of these aspects have ensured that by and large, the developers are ensuring that the money that is coming in from the flats which are sold are being used now for the further flat funding. So this will stay as an option available, probably where there are some unforeseen events and you really don't want to plan beginning of the project to say I want last mile funding. No, I think that should only be in contingencies where you've exhausted all other options to take something which is as expensive as that.
Okay. Atul, you mentioned about the need for last mile funding because of the regulatory complexities and the operational challenges that mostly developers and constructors also face. Sometimes approvals, some approvals come late, some kind of clearances come very very late, etc. That delays a lot of things, and therefore that cycle issue. Uh, what are these systematic gaps, according to you, that policymakers should also look at and try to streamline so that one does not need to really get into this contingency planning at all?
Sure. See, as a policymaker, you have to think of a welfare state. And obviously, in the past, also from the real estate side, we had black sheets, but not every builder, plan. As Mr. Tata said, this is a contingency plan.
Yeah.
This is not like something, some plan for you. The last mile, you have some funding gap. Now, if government don't think about it, don't make favorable regulations about it, think of the situation. The consumer will be stuck between EMI plus, both rental trap that they have to
Yeah.
pay both the things together. And
Yeah.
there have been so many cases. Especially if you see, you're based in Noida, there have been so many cases over there that consumer are not getting the delivery. So if government has to think about the welfare state, they will have to make those kind of provisions in the regulations, and they will have to provide that funding so that even if the developer, which is a private, you can say player, make some kind of wrong assumptions, and at the end, that developer is stuck, it should not impact the society as a whole. So government participation is required. That's why, I believe this is a very important funding which should be provided, and government should work towards making regulations to support this industry as a whole.
Okay. So one part of that is government is stepping in and ensuring that in the larger welfare of people, funds are provided and therefore projects get executed. That could be true for affordable housing, for example, where you have largest belly of consumers sitting, or mid segment where the largest belly of consumers sitting. Should this also be there for premium and luxury housing? Because as it is, you are collecting so much of premium for from an end user, from a consumer. Okay, and then for that project to get delayed and last mile funding, etc., to come in and help, it just does not make any sense. Rohan, for such projects, which are premium end projects, which are luxury end projects, etc., is this an option that should even be looked at?
So I would say it would be the reverse manner in the premium luxury projects, as even the land cost is higher.
Yeah.
Any developer's completion will be little bit linked towards the sale as well. So in a luxury project, if the ticket size is about 10 crore, in that case, the developer will need the funding alongside the construction.
Okay.
In those kind of a scenario, last mile funding will be more required because the luxury projects, the probability of products getting sold after the occupation certificate will be much more higher. So the developer will need more kind of a cash flow, and he may need a support. See, the last mile funding will be linked towards the sale of the product. If the product is in a good locality, it's got a good view, let's say he's got a permanent open sea view or a good open permanent ground view, or he's making a lavish 5 BHK or 6 BHK penthouses, and the product is getting sold, then he may not need the funding. So it's the strategic move what a developer needs to take it at a different stages of the construction. Like the initial stage of construction, he picks up at a X value. He gives some kind of a discount to the buyers compared to the other micro markets. In that manner, if he does it, he may not need the last mile funding. But in normal case scenario, luxury projects go a little slow, and they need more funding, because the more the affluential the buyer is, their probability of taking the product at a later stage is higher. You look at the all of the best products in Bombay. Oberoi 360 is the latest example in Worli. The most of the products are getting sold when it is at a near to the completion. When the asset size is more than 100 crore, people would prefer to buy it when it is nearby the completion. So that's why the developer will need the last mile funding in order to make sure the delivery happens on a time.
Okay, I think Mumbai developers need to take a leaf out of Delhi developers. In Delhi NCR, every single luxury project that is put on the market gets sold even before it's launched. And I just wonder where do those buyers come from if they are not also buying in Mumbai, whether it's Trump Tower or whether it's any of the projects of DLF or M3M of any of the luxury builders that are there. The only news that you get is first day, first show, project sold, right? So that's also quite interesting to look at. But Mehernosh, I just wanted to understand. Rohan makes an important counterpoint, which says that listen, even for luxury projects, maybe it's not as much of a contingency plan. Also, it could be part of the overall strategic planning, financial planning itself that you look at it. But given the high cost of capital, how is this maths going to work then?
I still feel I have a little counter view than what Rohan mentioned. Actually, luxury projects, if you were to even look at it in Mumbai, they are usually backed by Cat A or elite developers who don't have a problem in getting funding, right? So if you're talking of the luxury project, and let's assume 5 crore plus ticket size onwards, most of these are being built by reputed elite developers who do not have funding access issues at all. Many of them are listed. A few of them have filed their DRHP and are intending to get listed. So access to capital for luxury projects, frankly, is not a challenge. Even the ultra HNI buying a 8 crore, 10 crore property, by and large, when you look at that, most of them are having funds on their own. They don't even need financing and capital. So those issues, to my mind, on the luxury projects are fewer. And therefore, you're also seeing premiumization of homes, which is happening, right? If you look at any real estate data for the top 8, 9 cities, including, of course, Gurgaon and has been in another league. But if you look at these top 8, 9 cities, there is a serious amount of premiumization which is happening. And actually, it's crowding out, frankly, the affordable homes that is the need of the hour for many people who want to buy affordable homes, because most of the mid-sized developers and, of course, the large developers are now preferring to build these premium luxury homes, given the economics around the profitability that they make.
Okay. Yeah, I mean, at Magicbricks, we have a very robust research practice, and we release quarterly research reports. One of the reports is Prop Index, which monitors and tracks quarterly movement of demand, supply, pricing, and multiple related trends. And if I have to look at the latest report, it does indicate that while premium and luxury supply was growing phenomenally over the last 12 to 16 quarters, now we are seeing them kind of moderating. And in major pockets, major micro markets, real estate micro markets, at least now developers are looking back at the mid segment, and the supply is kind of, there's some push to supply coming there as well. Whereas there are new markets which are emerging, which are luxury markets now, new micro markets. There are pockets of Hyderabad, Lucknow, Jaipur, and many other cities where there's a lot of luxury development happening now. So that's an interesting phenomena happening in the country at this point of time, as far as supply is concerned, and how does it go. And Niresh, I wanted to understand from you, there is a source of private capital, private equity, as last mile funding, and there is a source of public capital, which is government. Now, Swami Fund, all said and done, while government has done its bit, but it's a drop in the ocean for the requirement that's there, and therefore clearly government cannot step in a very large manner as far as this is concerned. So private equity becomes very crucial. If that be so, then what role do you see, and how do you see private equity as an instrument expanding, and multiple new concepts coming in? I think Rohan did mention that HNIs are now coming in, and so on and so forth. What are some of these new trends that you see?
See, the essence of coming Swami Fund, the launching Swami Fund was to reinforce the confidence. That was
Yeah.
the first step that government did from its own side.
Correct.
It is agreed that it was a drop in the ocean.
Yeah.
But government gave a signal that yes, we are backing you people, a common man.
Yeah.
Don't worry, we are here for supporting you. We'll pay some amount on XYZ rate to the developer through a structured product, and they will complete the product. So this gives a reinforcement of thought in the minds of the user.
Uh-huh.
Now coming to the developer side, the developer has an option to get a cheaper capital if the private credit is structured. We can see that in next 5 years, India will have almost 30% to 25 to 30 odd percent of the private credit across epoch.
Okay.
It could be through structured instruments. It could be through any or other mode which is viable to the developer.
Yeah.
And once that becomes a large pool of capital,
Yeah.
then the cost automatically will come down.
Uh-huh.
The various ultra HNIs, the capital markets, everyone has to support the real estate industry, and they are doing their best. The government, the nationalized banks and the banking channels should also align themselves according to the modern ways of funding. The traditional will not work here because these are long-term loans. So long-term, they are the quasi-equity loans which will help to fund these larger projects and get the completion at a faster pace.
Uh-huh.
Apart from it, as we all, the panelists talked about the regulation in place. My take is we have regulations in place, but stricter enforcement of the regulation should be done. Failing which, whatsoever good RERA we may have, will not be able to do a justice with the regulation.
Correct. And I do agree with you. I think we seriously require an enforcement ministry as such, across categories, across industries, across every walk of life. And that's where, execution has been our biggest challenge as a country and as a society. Anyway, Atul, so the point would remain that last mile funding as an instrument, if it has to organize itself, if it has to become more structured, more viable, and scale up over a period of time, what are some of those fundamental building blocks that you think should be there for this to become sort of a industry by itself?
See, firstly, I think as we all were touching in the previous question also, that we have to work on the regulatory side. Means that this funding will be available, but I think it should be available to those projects which are compliant, especially the ESG compliance and RERA compliance. And then and obviously, if you see, this is some kind of a liquidity paradox, that there is a huge demand, but the supply is limited. So obviously it's a good business opportunity, so everyone would like to come over here. And again, if you see from the returns perspective, it's a collateralized kind of investment, that you have a collateral backing it and your returns are like equity. So it's a good opportunity, but someone will have to be the gatekeeper. So I believe it becomes more important that schemes like Swami or other government initiatives should be able to rate some kind of projects or provide some kind of grading, so that the investment is limited to those projects where there is a genuine need. It should, you have to understand, these projects are not abandoned, these are frozen. So you have to give some money to start it. But then on the same time, we also know that in real estate there are some people who actually abandon the project, so it should not be available to those guys. So a lot of government participation and regulatory things will be required, which will be the most fundamental block. And then obviously government will have to work on building the market for this. not only the private players can do this, because these are not small ticket investments, these are large ticket investments. So you will need some support from the government, which government is already working on. But as most of the government schemes we need in India, they need a lot of monitoring, they need a lot of push, they need a lot of times, they need to be kickstart again and again. So those kind of things will be required so that it becomes a success in our market. That I think are the two important things which will be required for the market to grow.
I think one of the challenges of government getting too much into such issues also is that it may encourage many other kind of practices also. I mean, government got into a lot of stuck projects with NBCC coming forward to construct and complete and so on and so forth. If government says that, listen, I'm making a regulation where every stuck project, NBCC will come forward, then that will also be an open field for a lot of developers who want to just run away and abandon the project.
That is why, I said that there should be some kind of, monitoring of these projects. There should be some kind of grading of these projects, and compliances are maintained so that, people can weed out the wrong opportunities and invest only in the right opportunities. And there the government participation will be required.
Okay. Mehernosh, from your understanding, yes, please, Niresh.
The entry point in India for a real estate business is very low. Be it a bigger project or a smaller project. In cities, I am from tier 2 town Indore. If I have got 5 crores of capital, I can launch my project here.
Okay.
The velocity of sales, I'll fund it through velocity of sales or through customer advances and back borrow steel and can start a project. So the entry point, the entry barrier for the real estate player should be very good enough, substantial enough, so as the project continues to the last as it is planned. I hope Mr. Tata will find my view appropriate.
I would agree, and I am just at the cost of repeating with the in by and large, if the planning is done rightly, Mr. Maheshwari, then as you rightly said, through the velocity of cash flows, the developer should be able to build it. And honestly, I think we also have to be fair to the government. They are not here to bail out and have a parachute every time one industry is looking to, sort of have its own set of challenges. I think the industry has to also find its own way, maybe a public-private partnership. Today there are examples of where we've seen some developers being in trouble and they've been able to pull in private equity from abroad. There are Cat A developers today who are listed who actually done that in the past and are now doing quite well. And a lot of global private equity is open to look at good, high quality construction being done. So, honestly, unless and until there is a completely unknown which is happening, there should be a good glide path for our set of developers. We should also be cognizant that real estate industry has its own cycles. It is a 7 to 8 year cycle.
Yes.
And we are maybe in the middle of the upswing right now, post-COVID. However, all of us have seen the real estate cycle go down. And at that point in time, having some of these institutions ability to be able to borrow in a way like RBI is the last person standing for a bank. Could we have something similar for our real estate developers who are doing the right thing? I think as all of us agree, there could be a few people who have probably not doing the right thing. Most certainly those folks, there should be a way to be able to jettison them out from that project and get a different management team leading that and some sort of a, let's say, partial credit guarantee equivalent, Swami equivalent coming in, but, being run by private players to be able to say, okay, there is confidence. Like in COVID, the partial credit guarantee scheme helped the NBFCs and the housing finance companies continue to fund the end customer. Something similar, taking a leaf out of a very successful deployment done by the government. That could be one thing which over a period of time could be looked at. But I think at the end of the day, as an entrepreneur, as a real estate developer, whatever project you're starting off, you must have your financial closure done. If that is done and you have some backstops to it, by and large, we see that those get done by themselves.
Correct. Maybe a instrument or a mechanism the way, for example, Dubai or Singapore or many other cities have put together, where you have to really prove the financial viability and funding before you even can be allowed to start constructing. Maybe some of those kind of steps would go a long way in ensuring that, as Mr. Maheshwari said, that with a 5 crore funding, I can really start a project and therefore get stuck, moving forward. And some of these regulatory mechanisms are very, very important. Rohan, would you be aware of any such good practices that are there globally or in any particular, country, city, which you think could be inspiring for us to draw some lessons from and put our own regulations in place?
So there are a couple of fund houses which have started coming up in India. So like Brookfield, Blackstone, and Heinz and Sumitomo Corporations in Mumbai, particularly, there are many multinational fund houses which are seeing a good prospect in India, and they are buying the RTMI assets. The commercial assets are mainly now driven by the not the AK developers but multinational fund houses, where the Hiranandani entire Powai portfolio is bought by Brookfield, and the entire India Bulls portfolio is bought by Blackstone, now named as the Nucleus. So many multinational fund houses are coming up in India, and they are creating a standard SOPs and practices how a developer should work like, and they are creating a benchmark how an industry should look up to it. For any commercial assets, till now they were buying the only the RTMI assets, but now like Brookfield is coming up with a Waterstone as a product in Mumbai, which is there. They are coming up developing the portfolio as well. So many multinationals are seeing India as the good resource and a good platform where they would want to put in the money, buy the assets, and lease it out to multinational companies.
Okay, so Atul, it means that if so many foreign investors are also interested in coming and supporting, it only bodes good news. But for this, as I said, for this particular uh, sector or category to really evolve as a structured, lending kind of a system, we would require a whole lot of regulations, fundamental processes, building blocks, accountabilities, outcomes to be decided, and so on and so forth. How and where do you think there can be a start that can be made here?
See, as I told you, the first step would be from the government side so that they can be the gatekeeper to select the projects. Then from the funds, obviously, these are very good, investment vehicles. So it should not be like that, everyone should be allowed to invest. That it can be in the form of REITs, past also, that, invest in a structured way, and this last mile financing should be need based financing. It should not be like available for everyone, and these are some of the things we have to keep in mind. Otherwise, it will again happen that a lot of investment will be pumped up, and then finally the result will be nothing, and there will be a lot of bad investments which will overall impact the real estate segment in India.
Okay, so there's a word of caution there. In the end, Niresh, uh, some sort of projection from you. You mentioned 25 to 30% of APEC funding, which is about $100 billion, likely to come to India, and so on and so forth. Some sort of a projection about last mile funding and its immediate and long term future.
See, to be very candid and honest, last mile funding should be a structured pillar into the real estate industry. I am not saying that it should not be. It has to be, but there has to be cost of capital should be adequate. Secondly, the management, the implementation of the capital raised, the deployment of the capital raised has to be for the specific purposes, failing which after infusion also the projects will not comply.
Okay, all right,
The,
understood.
the cross projects RERA should be stopped, which we all have seen in the past. So this capital, what we can project is, it can be more than the banking finance as well as the listed capital, which can come into this particular segment.
Okay.
So a structured way mechanism has to be created so that at a later stage, the common man investment can also come to this particular product. We all have seen the boom of SIPs. It's still continuing. The small amount of money has created a turbulence into the entire stock market. So what I'm trying to say is, let's do a product wherein such kind of money which is still stuck into the system can come forward and deliver fantabulous results to this last mile funding.
Okay.
I can foresee that it can be a more important product than SIPs.
Okay. That's quite a forecast.
Yeah, the collective capital that the Indians can pull in for this
Uh-huh.
particular product. And
Uh-huh.
we Indians are very affinate to real estate. Globally, if you see,
Yeah.
98% of the people in the West do not own a house.
Mm.
But
Yeah.
India, as soon as start earning, our thought process is we are indoctrined in our thought process that you need to get a house, you need to get an office, or whatever may be the thing which suits to you.
Yeah.
But we have a tag attached to the real estate, a possession tag attached to it.
Mm.
So a product which can collect the amount from an investor, small investors, pool in the capital here,
Uh-huh.
can definitely do for good projects.
Okay. So you advocate a case for structured, approach to last mile funding, and okay, Atul, what's your take? Next few years and long term vision for last mile funding.
See, as the projects are growing in India, obviously the need and the market will be growing. And I totally agree that this should be a structured kind of product, because if it is built in a proper way, then even the retail funding can come into it. And I agree to Niresh that this can be a good investment vehicle that people can invest like SAPs here. And it's something like, it can become something like fractional ownership of real estate, which is going on. That instead of buying a house, you're buying a
Yeah.
product and you're getting that return. So totally, agree to this thing that it should be a structured, moderated kind of product, and it will be a win-win for everyone, because if the retail capital comes in, then the pool will be large, and the real estate guys will also have access to that capital, and people will also be able to get some returns out of real estate, which they always want to do. So I'm totally, aligned to this idea.
Yes, absolutely. REITs were once touted as the solution to a whole lot of challenges that the industry is. That has moved at its own pace and really not taken off the way it was expected to. So I'm sure there are a lot of lessons that we have. Rohan, what's your take on immediate and near future for last mile funding?
So, depending upon the product to product, last mile funding will continue. And depending upon the situation, developers will keep looking at it. And there are a couple of players who want to do last mile funding. So,
Uh-huh.
it has a good prospects, and we see it that it will continue in the near future.
Okay. Mehernosh, in the end, your words of wisdom. I know you have been cautioning on a lot of things and you are advocating, saner practices. So, what's your take on this?
No, I think it is important in any industry. We need to have contingency plans, and therefore, I would agree with the other panelists as well that there should be opportunities. And the good news is that there is a plethora of capital that is now available for funding, which is for last mile. There are various ways you can access that, and you could retailize it like what Mr. Maheshwari spoke. You could have various other initiatives where developers reach out and have a bilateral B2B private equity funding coming in. We know of various joint development projects, etc., etc. So some of these are different quivers. I would say different arrows in a quiver that the real estate folks will have. It should be available to be used to be used only as part of
Only.
contingency,
Yeah.
not really a plan to be made when you're actually drawing up the project plan.
Okay. With those words of caution, uh, ladies and gentlemen, last mile funding is something that is necessary for the industry. It helps in really completion of the projects in lot many ways, and what is required is for it to become far more systematic. A lot of regulatory policies and processes have to be put in place, and this is something that can really become a good source of capital for developers and constructors and will help in timely completion of the projects. This is it from this particular episode. If you have liked it, don't forget to like, share, and comment, and keep watching MBTV for many such interesting insights and episodes on variety of topics.